one stock that is about to skyrocket. It recently had earnings. The earnings were solid. 400 plus million in revenue, was about the same as last year, but it beat analyst estimates revenue. And interestingly, there was a segment of the revenue that grew over 10% year over year, which is the defense segment, which is a very stable source of revenue. So investors were excited about that. The ticker is HXL, Hexel. They do materials for aerospace and space itself. Now with companies like SpaceX, that is a growing market. And then they are moving out of commercial aerospace. So that was the dying market that they had been serving, and moving into defense is a stronger long-term play. The ticker is HXL. Earnings are awesome. This is not financial advice, but let's jump into why this stock could go up a lot soon.
This is Sam Putnam.
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 So this is the earnings, 450 million, about the same as last year. You can see the earnings per share, a little less than last year. You can see the chart, boom, big move up. Slightly missed earnings per share, but this is a huge move up, considering this company, has been going sideways, except for the tariff dip and rebound, for at least, 2 years of sideways. Pretty impressive that it went up at all in 2022 when so many companies went down, but they're not super tech related, so that kind of checks out. And I guess it was a rebound from 2019. So this is definitely a unusual chart to have such a big dip, not in 2022, but in 2019. But this revenue opportunity, this move is one of the better Q3 earnings moves we've had. It's kind of a choppy time in the market. That's clear if you just look at the SPY in general. We went up in September. Chi disagreed, and then tariffs are not going to happen again, so we marched right back up. We're pulling back a little. This is expected after like 5 gap up days in a row, or whatever you want to call these. I mean, this is definitely a gap up, but these days as well. So yeah, we're cooling off, and now we've had 5 days down in a row, so it's starting to look more interesting again, and it's hard to find setups for that reason, that it's been choppy. So this is a clear setup over this close right here, which is $72. We're basically exactly sitting around that. So it's a very timely idea. A lot of companies, we'll see. And Meta just continuing to sell off after that tax recognition, $15 billion at AWS. Amazon, driven by AWS, 20-30% growth year over year, up a lot, and then up again over on that OpenAI. They're going to buy NVIDIA chips. It's a little bit of a head scratcher because it's like, well, doesn't AWS have plenty of chips? But very bullish to be implicated with OpenAI for sure. Right after Microsoft just came off with that giving back their first right of refusal for OpenAI compute. So they're still going to get a lot of revenue from, they literally have 30% almost of equity in OpenAI, 25, whatever. And they're also going to get a billion or up to 12 billion total of compute spend from OpenAI. But despite all that, kind of selling off, not that interested in that. Maybe there's a buying opportunity down here, but it's not the same reaction seeing from, Apple, which went up as well and then sold off though. And then, the other Mag 7s, Tesla rebounded and looking super solid here. I mean, this looks like it's going to break out again, just like it did back here. So all that to say, this is an unusually good earnings reaction for this earnings season. It's not in a super hot sector, Mag 7, AI. But this is the segment, 180 million, and it is up over 10% year over year. And they have guidance, up near 2 billion. And this is the sales beating the analyst estimate. It's a big deal. It's a growth in the right sector, and they are repurchasing their shares. So that's a vote of confidence for sure. We'll see how much of that additional, it's almost $1 billion in authorization of share repurchases. This is a big company, a $5 billion company, almost entirely institutional owned, which is another reason that it's very safer to own. I mean, you look at some of these moves recently, QURE is one of them. Institutional ownership is a little lower. Look at a company like NTLA, which also is small, billion or so, I believe. Yeah, 90%. I mean, these numbers don't seem like much of a difference. But I do think if you can parse that, you might be able to get something out of it. I'm sort of walking back that statement, immediately as I see that IBM has 60% institutional ownership. I mean, see when you put NVIDIA what it says. So, yeah. All right. Yeah, no, I'm completely almost going to walk back that statement. Unless there's some type of biotech specific connection to institutional ownership. NT LA and NT let's see, RYTM is another one that recently went up. You just have to be careful with these biotechs that are going up recently. Yeah, so that's 99%. Just any sort of little ALNY. I promise I'll look back at HXL soon, but yeah, this is 100% institutional ownership. I think this is an important biotech metrics. I'm trying to give you guys some alpha here, okay? Because Hims, another biotech, just came out with a Wegovy Novo Nordisk sort of go ahead to market their drug. Not a ton of institutional ownership. And, when we look at this drop, okay, here we go. Lower institutional ownership, big drop in a biotech. QURE, slightly lower institutional ownership, below 90%, big drop in a biotech. And NTLA, Intella, the CRISPR company, lower than 90% institutional ownership, big drop in a biotech. So, all of them are for different reasons. This is based on a patient having a side effect. This is based on them doing their results, comparing them to a control trial. This is based on like a marketing authorization sort of disagreement with their partner Novo Nordisk that they have a royalty agreement with, I believe. So different results, different reasons rather, but all connected to lower institutional ownership. So all that to say, biotech is investable, but it's hard to find good ideas right now. So that's partly why I'm looking in the biotech at all. But HXL is the one that's safer. It's not in biotech, so you don't have to worry about that. It does have rising revenue in a stalwart, a sector segment that is going to stick around. So that led to a big move up. And there's a risk level that I offered for you. So that's the idea. Hexcel. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I release that once a month for members, subscribers in the YouTube post section. And if you want to see these videos before they get released, up to 12 hours or slightly longer before, hit that join button. You also get access to the Discord, which you can get by going to stockscommunity.com. You get a trial, actually. You try it out for 7 days for $25. You can even use code 25 to get 25% off that. So give it a shot if you think that's worth it. See you in the next one.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.